guys, Tyler Pensick with Real Life School podcast here. We talk about money, real estate, and life. And today I have Stock Talk with Scott. Scott Trammell, links in bio, by the way. But today we are going to talk about the stock market.
All
right. And the reason why we're going to talk about the stock market is because 99% of the people I talk to, I go, what do you do with your money? And they say, well, you know, I bought Netflix, I bought Amazon, I put my money in the stock market. So he's been doing this a long time. So I wanted to pull him on the show and talk about your story, how long you've been in the stock market, and then we'll go through some tips about, hey, if I got $500 to $1,000, what would you do if you were me? Okay. So let's start with, how long have you been in the stock market for?
I've been doing it since about 1999.
Oh my gosh, so 25 years.
Yeah, 25 years.
Holy smokes.
Yeah.
So you've seen a few markets, ups and downs.
I've seen the bubble.
Okay.
I've seen the housing crash.
Okay.
I've seen a recession, I think it was, and of course, 2022.
Oh yeah, COVID hit, right?
Yeah.
Shut down the world.
Yeah, COVID.
Yep,
Yeah.
exactly.
Yeah.
So ways for people that invest, they talk about the stock market, they talk about 401ks, they talk about Roths, whether it's a traditional Roth or a Roth IRA, but like what was can you remember the first stock that you bought, and why did you even like get into the stock market?
I think the first stock I actually bought was Wang Laboratories, the company I worked for.
Okay.
Because they had a stock purchase program.
Okay.
A lot of companies do that, and so I bought that first. Then I went and actually opened an account with a broker. Used to, you had to call a broker.
Right.
And it cost you $35 a trade.
Back then.
Yeah, just to talk to the broker and get the trade in.
So two things real quick. You worked at a company that gave you stock options. Like you could buy a...
Yeah, you had a stock purchase program. At the end of each quarter, they would purchase it at the best price for that quarter.
Got it, okay.
But you'd tell them how much money you wanted to contribute towards that.
And it was $35 for one trade, so it didn't matter if you bought 5 stocks in that company or 500.
Well, that was when I was doing it on my own outside of the company.
Got it. Okay.
But it was $35 per trade to buy, $35 to sell. So you had $70 just to do a trade.
Holy smokes.
Yeah.
Okay.
Instead of $7
yeah, right.
And now zero.
Right.
Much.
When I started, Scott Trade was, I think it's been bought out, but it was $7 a trade. $7 in when I bought and $7 out when I sold. And it didn't matter, you know, how many stocks I decided to buy. But today you say, hey, right now it's nominal fee. It's like cents.
Yeah. Most of them have a zero fee, but you'll see a little tiny amount, like cents worth or something like that.
20 cents.
Yeah, 20 cents.
If you bought 50 grand or something, you might see 50, 60 cents or something like that. Okay. So what was it and why the stock market for you?
Well, I'll tell you, when I really got into the stock market and opened my own account and things like that and started trading myself, I was probably in my late 30s.
Really? Okay.
30s or 40, maybe even 40. But I saw these young kids coming out of college that they were trading stocks like crazy. You know, they were doing the E-Trade and the things like that.
Day trading.
Yeah, they were day trading, doing things like that. And I thought, and they were making a killing. And so I said, I got to figure out what these guys are doing.
Yeah, whatever you're doing, I want to learn.
You know, a lot of these guys work for me. And I'd go down there, and instead of being on their job, they would be on their trading.
Yeah.
I started getting some feedback about it, and I decided to open my own account, and that's when I started doing it in 1999. And of course, in 1999, everybody looked like a genius because the market was going straight up.
It was just
.com, you know.
Yeah.
It was right before the .com.
Right. Okay.
And then when the .com hit and the bubble burst, you didn't look like a genius anymore. Even those kids that were trading those stocks, they didn't look like a genius anymore. And so this is a lesson learned. You know, you just watch stuff go crazy for a while, and 2 things drive the market, and it's fear and greed.
Fear and greed,
right.
2 things that drive the market.
Right.
Okay.
And the greed makes it go up, and the fear makes it go down.
Okay.
So there was a lot of greed right before the 20s, when the .com thing happened.
Yep.
Anything with .com was making all kinds of money.
Got it.
Kind of like the AI thing that's going on now. Anybody that mentions AI,
Yep.
you see the stocks going up.
And it's kind of like been real estate for the last 10, 15 years. Buy real estate, and it's just gone to these enormous prices.
Right.
Right.
Is there another 2007 coming? You don't know.
Yeah.
You
That's
don't
going to
know.
be a question that I'm going to ask you here in a few minutes.
Yeah. Yeah.
Okay. So a lot of the younger generation right now, it's hard for them to get into real estate. And for the obvious reason is housing prices are super expensive. That's what I do. I typically go and do a budget and find creative financing and all that stuff to get them into a home. But if I had $500 to $1,000 and I was about 18 to 25 years old, where should I put that money to grow it?
Okay.
And would you do it in the stock market, and why?
Okay. Of course, I know you cover this on the show, but the first thing you do is you get rid of any debt.
Yep. Okay.
Before you start thinking about putting money back.
Okay.
But yeah, I would put it into an account of some sort, like a Roth IRA.
Okay. Roth IRA is taxed today, and then when you pull it out at retirement, you don't have to pay tax on it.
Right.
So it's pre-tax vice.
Unlike what I've got, because in my day there was not a Roth IRA, so I've got a traditional IRA.
Yep.
And so when I take my money out, I have to pay income tax on it.
Right.
So Roth IRA for sure.
Max it out, and
Yeah.
every year it's been increasing roughly $500. I think it's 7,000 this year.
Yeah,
2,000.
max it out. Give all you can give extra. It doesn't matter. I mean, you want to make money off of that money.
Right.
And
so inside the Roth IRA, for a lot of the people that are joining us, a Roth IRA is just an account that you have put or isolated that money after taxes, and now you have an option to put that money into the stock market, right? Other than that, it would just be like a general savings account, depending on what company you choose to do business with, right?
Right.
Okay, so they've opened up a Roth IRA. They've paid off all their debts, hopefully. Now, what would they do with that money, in your opinion?
Well, you want to invest it in something.
Okay.
And if I were a beginner, I would put it into one of 3 ETFs, or exchange traded fund.
Exchange traded fund. It's called an ETF.
Yeah.
Okay.
And so it's kind of like the old mutual funds.
Okay.
But they don't have the huge fees.
Okay.
Okay. There's 3 that I would put my money in if I was a young person.
Okay.
QQQ.
Okay. That's a good one.
That tracks the NASDAQ markets. Okay.
Okay.
Then you got the SPY,
SPY,
and that tracks the S&P.
S&P.
And DIA tracks the Dow.
Okay.
So those are the 3 I just kind of put my money in to start with. You can split it up 33% for each one.
Okay.
Whatever you want to do. And just, on a timely thing, cost average.
Okay.
You just want to keep putting money in it.
And the reason why you choose these 3 ETFs is because, from Barney style, is that they take a conglomeration of all these different companies and take the averages of incomes, profits, and losses and productivity within all these different companies into one account. Right. That's what these ETFs are doing. So it leverages and averages out your risk. Vice just buying one stock. Is that right?
Yeah. I mean, each one has, you can drill down and see what each ETF holds.
Okay.
And so, so you want to spread it out between the 3 of those, because that's going to track the 3 different markets.
Copy. Okay.
So it's one year the Dow might be up and the NASDAQ down, and vice versa. That's how it goes. And so you just kind of cover yourself that way. And you don't worry about when things are going down, because you got to think about, you're getting it cheaper.
Yeah.
You're getting it cheaper.
Right.
Eventually the stuff goes up. If you look at all those markets, the trend is up.
Yeah.
The trend is up. So don't worry about day to day. Don't even look at it. Just put the money in it,
Yeah.
And
there's been days where I'm looking at this market and I'm like, oh, it's a great market, great day. Everything's in the green. And all of a sudden there's a red streak, and then I'm checking it every day. I like that. Hey, just let it go.
Yeah.
And if it is in the Roth IRA, it doesn't matter. If you're starting in your mid-20s, early 20s, you don't have to worry about it for another 40 years.
Yeah.
Just consider, in my opinion, that money gone. You're investing it smartly, right?
Yeah.
But if you have a bad day, it doesn't matter.
Yeah. Really, when you're young like that, down is good. I mean, because you're buying it cheap.
Right.
And you want to buy it on sale.
Yeah, that's
and
true.
so when you get my age, you hope it has gone up, and it will, because that's the trend.
Yep.
I mean, you look at the last 20 years, what the stock market's done, and the last 10 years, the trend is up.
Yeah.
And so it's going to continue to go up too. It's not going to stop.
Okay, so we talked about the Roth IRA, the traditional, which you're in, and the new one that's developed over the last, I think it's just in the last 10, 15 years. Don't quote me on it. But 3 things to look for when you're buying either an ETF or a stock. And for me, I look at the dividends right away, because I'm thinking, I'm buying the price of the stock. What is the percentage that I'm going to be predictably paid on that stock? What about for you? What do you look at?
Well, one of the first things I look at, because I trade single stocks, I don't do the ETFs as much. I do ETFs, but not as much. I look at volume.
Okay.
And volume, if you got a large volume traded each day, that means there's liquidity. You can get in and out. Okay. There's not any problems with that.
So volume means, correct me if I'm wrong, it is the amount of those shares that are being traded for that company each day?
Right.
Okay,
exactly.
Got it.
Exactly.
Okay, so you're thinking, hey, there's a lot of other people out there like you and me that are turning this stock over every day. Okay, that's something that you
So it's easy to get in and out.
Got it. Okay.
Usually anything over 1 million shares traded a day is what I look for, something like that. I look for good companies. I mean, you got to look for a good company or something that's trending, maybe, but you got to get in early.
Yeah, sure.
If you're hitting about a hot stock and it's way up, like let's say NVIDIA. It's so high. Those kind of things I just have a hard time jumping in on.
Sure.
But it's kept going this year. Yeah. So, sometimes it works, sometimes it doesn't.
Right.
But I always look for something that's had a pullback.
Okay. What does that mean, a pullback?
Well, stocks have volatility.
Okay.
They go up, they go down.
Yep.
I look for stocks that have a good bit of volatility, and they go up and down. So I'm looking for that down dip.
Okay.
That it's not going down because it's a terrible stock.
Sure.
It's going down just because of volatility. It just does that.
Okay. So when you're looking at volatility and you say that you're getting a good deal because you're buying the stock on sale if it's in the red, and I totally concur. When it's in the red and you're watching the trends of this up, down for a day trader scenario, which is what you do typically, right? Sometimes.
I'm not so much a day trader. I trade as I need to.
Okay. Copies. Yeah. Okay. And we'll talk about that in another episode. Yeah. But so you've seen a good ride. It's been green for a few days or a few weeks, and then you start to see another trend. Means that it's starting to pull back, so it's a little bit volatile. And now you're looking for those, what's your percentages that you look for to hop in at?
Oh, I look for a good 5, 6, 7% pullback on anything. I like 15, 10, 15.
Yeah.
And you remember what I said, the fear and greed.
Oh yeah.
Watch the articles that come out on news.
Yep.
If you get some kind of news and it's just some kind of, some of them get plain right silly.
Yeah.
Some of them just,
it's true.
It drives them. People read that stuff and they go and sell. And I just look for things like that, the fear.
Yeah.
Fear dropping it for a day or two, whatever. Sure. And then just jump in, start buying you some. You don't have to buy it all at one time. If you're going to get, say, 100 shares, get you 25. Okay. And make sure you're getting close to that bottom.
Okay.
You're not ever going to get the bottoms, and you're not ever going to get the tops.
Yeah. So I talk about that with people that I'm helping here. I'm like, hey, the stock market's great. You mentioned something about buying stuff that you know. I know Amazon. I knew Netflix. I knew Disney. I knew Ford. I knew these names, right? I don't just hop into a stock, and correct me if I'm wrong or what you do, but like I can't read enough in the news to rate or understand if that is truth or if there could be possible or if they're just making a publicity stunt to try and drive a new set price on the market. What do you think?
Well, I follow stocks pretty close to the ones I buy and trade now. So I can tell when they call it FUD.
FUD?
Yeah.
Okay. What's that?
Fear, uncertainty, and doubt.
Okay.
I can tell when it's one of those.
Got it.
And because I know my company. And the way I know my company, I watch a lot of stuff on YouTube about the company.
Okay.
For instance, I'm a big holder of Tesla.
Okay.
And I watch a lot of Tesla videos.
Okay.
There's a lot of people have channels on it, and you know everything. And you can see something come out in the news because they do not like Elon. so you can tell, you know, they're driving the stock down a lot of times.
So that's a publicity stunt. So you're looking at these opportunity buy-ins when Tesla, a news article comes out that's knocking Elon. You're seeing, hey, they're knocking him. Still great product.
Yeah.
Right.
Yeah.
For a variety of reasons, whether you like it or not, efficient, right? And they're coming out with some new technology that we talked about the other day. And you see an article and you just know that this is probably going to bump down 5, 6, 10%. And you're like, okay, I'm watching the ticker, and now you're ready to execute the order, right?
Yeah. I know the levels of resistance when it's going down. You know, it hits a level of resistance where it will not go anymore. Okay, it's a good support. That's a support level.
Okay.
Resistance going up. Down is support.
Okay.
Okay, so when it gets down to a certain level, you think, okay, this is the bottom.
How do you know that?
Well, you can look back at the charts. You know, that's one thing I look at, and I use Yahoo Finance for that. I pull the chart up like a 6-month chart, and you'll see, if you look across the way, you'll see where it dips and where it gets to
Levels.
maybe another dips at different levels.
Okay.
And you can see sometimes it hit 2 or 3 times that same level and start to go back up.
Copy. So you're looking at trends.
Trends.
Again. So you have a few things. One, you are on YouTube with a lot of other people researching, listening, learning about that company. For this example, it's Tesla. Number 2, you're using yahoo.com and checking out the predictable trends in terms of rate drops and where it's leveling out and taking that average in the price.
Right.
Okay. And then what's your next step?
Well, I'm looking at those levels where it hits that level and then it starts to go back up. If it's that, you know, let's say like Tesla's 175 or something, $175.
Okay.
When it hits that $175, I'll start buying.
Okay.
Okay. And if it goes down to 170, I'll buy some more. Because it's on sale more.
Yeah.
And then if, you know, here's where it gets hard, when it goes down to 150. Okay.
Yeah. So what do you do?
Yeah.
When it goes down to 150.
So that's where your conviction comes in. You either know the company, you know that CEO, or you don't, and you know that it is just the stock market, and the market drives stocks. Okay.
Yep.
If you look at the market and it's a bad day, all those stocks are red.
So you'll just look at you'll pull up the stock market and you just see red, and it's not necessarily Tesla. It's just
the market that day.
Yeah.
And
so what do?
I buy.
You buy more.
I buy more because if I know that company's good company, I'll buy more.
Okay.
I mean, because if I've got the money.
Okay.
Now sometimes you'll get your money in there, and you don't have any more spare change.
Right.
And so now you've got to just ride it.
So we're coming into a unique election year. It's not unique, but with the markets that are, you know, news articles and companies doing this and that, and fear is a big driver, like you said, right, which causes the market to go down. How could you give some advice to somebody that's like, hey, I have $500 to $1,000.
Okay.
It's an election year. We're in June, July, August, approaching the last quarter. What would you do?
I'd definitely get it in the market as soon as I could. I mean, if you're 20-something years old, you've got 40 years, right? 40 years.
Yeah.
So don't worry about it. Just get that money in the market.
Okay.
It's not making you any money.
Okay.
Sitting on the sideline.
And we talked about it. So one of those ETFs with regards to the NASDAQ, Dow, S&P, or whatever. Yeah. Okay. So it doesn't matter if the market goes down in the last quarter. Your advice is it will always come back. The market always comes back.
Yeah.
Okay.
Do not worry about it. If you're this young, at a young age, doesn't matter. You're getting it on sale. From 10 years from now, it's going to be higher than what you bought today.
Yeah.
Guaranteed.
Even if there's a market pullback? I mean,
well, it has to be a bad market pullback.
Yeah, no.
And here's what I can tell you about market pullbacks. They don't last long.
Yeah.
They don't last long.
It's like real estate for me. Right. If you have enough time, you'll never lose with real estate. The same thing with the market, right? We're at an all-time high right now, and it's always going to go down, but it'll always come back up. So I love that take. Like, hey, if it's in the red, I'm buying it on sale.
Yeah.
going all in on one stock. Now, I have gotten lucky. I was looking at trends. I bought Netflix at $32. I bought Amazon at $280. But it was only because I kept my eyes open, very similar to how you look at YouTube and you see all these other people. Your eyes are open to that stock. I was just looking at my friends and like, hey, I'm going to their house. I'm going all over the place, and I see like, what's this Netflix? What's this Amazon? Packages are getting delivered. Right. And I didn't even have Amazon at the time, but I just kept my eyes open. Is there a way that you could give some advice as to if I'm 18, 20, 25, 30, how can they keep their eyes open? How can they kind of pick a stock like you picked Tesla, you know?
Well, it's all of what we just talked about. Okay. Knowing your stock. CEOs are so important.
Okay.
Knowing who's running the company.
Chief executive officer. Yeah. It's like the big dude or chick in charge, right? Okay.
I was like that with Sirius satellite radio.
Sirius?
When it used to be, there was an XM satellite radio and there was a Sirius satellite radio. Yep. I was buying both of those in 1999.
Were you really?
Yeah. So
that was my first stock, by the way, in the early 2000s.
Yeah, that was one of my first.
It was like $7 for XM radio or something like that.
Well, I was loaded up on Sirius satellite radio, and they had a great CEO. I forget his name.
Okay.
But man, he was good, and he was not going to let them go under.
Sure.
And so his focus was getting cash flow positive. So I could tell he really was trying to make that stock go up, and it did.
So leadership.
Leadership is for sure.
So yes, the company, yes, YouTube, yes, articles, but also looking at who's in charge of that company.
Absolutely. That's real important.
How do you do it? Do you see what companies that they came from? How do you dive into the CEO?
You can do that. Yeah, you can. Of course, we've got Google now. You can Google anything, see where he's been or she's been as far as the leaderships go and how that company's done. Okay. You know, so I just believe it. The best luck I've had with stocks, leadership.
Really?
The worst luck I've had with stock is leadership.
Do you have we only got a few more seconds here, a few more minutes. Best stock, worst stock of your entire life?
Worst stock?
Yeah.
JCPenney.
Oh, JCPenney, sorry.
I mean, 100-year-old company.
Yeah.
You would think it's not going anywhere.
Yeah.
But it did.
But it did. So hopefully when you're buying in the red and you're getting it on sale, you got to pick up on the trends, the news articles, possibility of the company going bankrupt. Is it going to be, bought out? It could turn out bad. Best stock.
Best stock. I would say probably Sirius satellite radio was my best investment.
Really?
Where I timed it best.
Okay. And you used all these techniques?
Yeah, every bit of it. I mean, But Sirius satellite radio was a real good one for me. Novavax was a good one for me, but it went back down, so I had a good hit off of that one. And I just love Tesla. I love the company.
Yeah.
And I also, this is another show, but Bitcoin is another investment.
It was another one for another day. But, I talk to a lot of people about their finances. I talked about growing their wealth. Not everybody can buy that home with $500 to $1,000, but over consistent years and habit patterns of putting $25, $50, $100 here, and just staying consistent with your purchases. When it's in the red, buy. Don't get scared. Do your homework. We don't have all the answers sitting here with your particular situation, but his link in bio will be at on reallifeschool.com. You can see his YouTube channel. What is that channel?
Stock Talk with Scott.
Stock Talk with Scott.
It's a tongue twister.
It is a tongue twister. But we're here for you guys. We understand what it's like to be able to try and grow this paycheck. Each paycheck is so precious. We understand what you go through Monday through Friday, and we understand that you want to build that wealth. For me, it's real estate. For him, it's been the stock market. And with a combination of both, you could really leverage, when the real estate market's down, stock market's up, or vice versa. So just take some of these techniques and use them and apply them to your own situation. I'm a huge believer in the company and product itself. Netflix, we used it. Amazon used it. Tesla, use it. So if you feel like you need more information, you can always contact each one of us independently. And this podcast will be made available at reallifeschool.com. And Scott, thank you for sharing some of your techniques with us.
Good to be here.
All right. Take care, guys. Bye.
Bye-bye.